Yo, what's going on, guys? Welcome to a weekly recap. I haven't uploaded in a while. I just get too lazy to record and talk at the same time when I trade live, so haven't been on that, and I don't know if I will be, but I'll make a weekly recap about every day and how I approached it, if I remember correctly, too. Starting with Monday, obviously bullish. Let's look at market structure, right? It looks like this. Delivering from uh, a previous day low already, right? We had this previous day low, plus we're in this volume imbalance right here. Uh, so yeah, that's just obvious that we're going up, right? Uh, Now I want to see how can we go long here. It's 9:30, uh, and I'm just waiting, right? And we end up coming down to these lows, and I think I just didn't get an entry. I'm pretty sure. I think I was. Maybe I should make these day by day. But yeah, I don't think I got an entry. Let's look at the lower time frames. Oh, I remember. Okay, so I was waiting for this 3 minutes inverse, right? But it just inversed too high. It inversed all the way up here. This was going to be my break even spot, so I was hoping it inversed somewhere around here, right? So my stop could be down here, and then my take profit would be those highs right there. So yeah, draw was correct, just no entry there. Uh, so that's how I approached it. After I saw my draw got hit, I was like, okay, there's nothing really else I can do except uh, just get off the charts, and that's what I do. I just get off the charts as soon as I can. It's about preserving capital and just acting on when the time is right. Okay, moving on to Tuesday. So let's just look at the pictures I drew. These are what I drew in the moment. So wait, yeah, this is Tuesday. So let's just hop into 5, right? So obviously we're very consolidated over here. I knew we were consolidated, right? This is our range right here. From wait, am I looking at the right picture or am I tweaking? No, I'm not. I am. So this is all consolidation to me. Consolidation, right? But uh, yeah, I was looking for us to break out of that range, which would be here, trapping people to what they want to sell off because they're trying to chase this price action. So, wait, this is 9 o'clock. I need to fast forward to 9:30. 9:30. So, yeah, I'm looking for a reason to come into these lows right here before pushing up into the opposing side. That's just a normal PO3. If you don't know what that is, search up ICT PO3. It's a very simple concept. So we can sweep out those lows. Uh, there was a actually took a loss here. For the first loss was right here. Try to inverse this fair value gap right here. Uh, but got stopped up there. We came down lower. There was another 30-second fair value gap right here. 30-second inverse right here somewhere, and that would have been my re-entry. Uh, let's just say it was up there. Stop was here, uh, and TP was up here. So nice 1 to 2. Come up there very fast, edged a bit, but come through it, right? So that's what I drew up here. And if you wanted to wait, we also had this. This was my break-even spot right here, which was this 5 minute. Or you could have waited for the 5 minutes inverse for potentially getting in. But very, very simple trade, very clean price action here. Consolidation, manipulation, distribution. Okay, so Wednesday did not take any trades this day. Why? Because the draw, it was just not clean. If we look right here, we were in this range, but then we broke down. That's if we look in the higher time frame, this could be our consolidation. This would be our manipulation, and we already distributed. So the PO3 already happened, and it happens in the same order every time: consolidation, manipulation, distribution, and then it goes consolidation again. So knowing that, I just knew we could reconsolidate. We pushed down right here, and just through the whole session, I was like, okay, I'm not really looking to take anything, and I think we can be very 50-50 right here. Uh, and yeah, I mean, we swipe this high, and then we just dump. I'm pretty sure. Yeah. So wait, yeah. So my bias was bullish. This was me in the 11th. I was hoping that we'd. I was trying to find the continuation structure model, which would be us respecting this 1 hour fair value gap because I was bullish. Why was I bullish? We had kind of relatively equal highs right here. Uh, some highs right here. And plus, I just didn't see us on the higher time frame wanting to come down, right? We did, right? I was wrong there, but I had no entry anyway, so it didn't hurt anybody. And that's just 50, really 50-50 price action when we sweep a high and then sweep a low right after. So didn't engage in this price at all. If anything, I wanted to see how do we come down to this hourly fair value gap and then start changing market structure. I saw this 5 minute and I was like, okay, us tapping into here, how can we possibly make our way to this 5 minute fair value gap? But we didn't. We didn't inverse this 1 minute. If we inverse this, I would have entered long into this 5 minute. 5 minute as the target because if I'm wrong, we come to this 5 minute, we push down. Break even. I'd be break even or TP'd right there, or I'd aim for higher. Uh, so yeah, nothing this day. That's just you gotta understand when not to trade and when to trade. Very clean day right here. This was Thursday. We swiped all these highs right here. Notice how we have this kind of trend line liquidity, right? Whoever trades support and resistance, uh, they think this is support and this is resistance, this is support, right? So we break above it, and now what do support and resistance traders think? They think uh, resistance becomes support. So they're trying to long right here, right? What I'm looking at, what smart money's looking at, we got this 15-minute fair value gap. If we truly are bullish, then we'll respect this 15-minute fair value gap to the upside and go like this. If we're bearish, we break down below it and use it as the inverse to go lower. I'm wanting lower because we have uh, lot of lows, very obvious lows right here. This low, this low, this low, all these lows, right? Uh, and just to prove that it wasn't hindsight, wait, that's the wrong photo. Right here, this was me drawing it before it even happened. Uh, I was already looking at those lows. So what I'm looking at is how can I go bearish here? So what we did was we started breaking down. I saw we have this 5 minute fair value gap right here to the downside. I'm like, okay, I'm trying to find a continuation off that fair value gap now. So just waiting. Market hasn't opened yet. We dump. We swipe the low a bit, but for me, this is relatively equal lows. We only swiped it a bit and then started pushing up. This is trapping traders in being long right here because they think, oh, this is support zone right here. Okay, so they think this is support level now. We know, smart money knows that this is a fair value gap right here. So what are we doing? We tap into that fair value gap. Look at this right here. Come into the 1 minute. We push off it perfectly. Look at the close. Boom. Right? I can't show it here because I don't have the old data, but on top step right here, this was a 30-second inverse fair value gap. So we closed below it. I entered right there. My stop loss was somewhere over here. Take profit down here for a nice 1 to 2. And this ran, right? That's why having a strong bias and a strong understanding of draw and liquidity is the most important thing. Having a model and a strategy is sure that's important because it's only because you kind of have confidence in it, and it's something to enter on that matches your bias. Having a bias is very important. So that was my stop loss. It was actually up here. I lied. Uh, yeah, my take profit was right there. That's the proof. But yeah, so boom, right? Ran 1 to 4. So everything that I marked out. So yeah, like having a bias is important, and having that psychology to be able to execute is very important. Uh, moving on. Cool, cool, cool. Okay, so I'm bullish. Like, I was already bullish before CPI hit. Why? Because what I see is consolidation right here. This is consolidation. Wait, I'm gonna pull up pictures. So I marked this out in the morning, right? I was already bullish before it even happened. But I knew we had to come down, right? I'm not just bullish to be bullish. I knew we had to come down. I drew it right here, right? Why did I know this? Because of PO3. We consolidate, we manipulate to the downside. What are people doing? They're chasing the short. They think we're going short because they see market open and boom, we are just pushing down. So what do they have to do? FOMO, 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 right? But smart money, inverse fair value gap, right here, 1 minute inverse, entry, up here, oh, okay, entry, stop loss, and then we target the opposing side of the liquidity. All these highs right here, all these resting highs. Look at all these equal highs. Quote unquote resistance, right? That's what they say, resistance. But look how we treat that resistance. Bang, right? It took a little time to play out the full TP, but bang, boom. And yeah, I mean, clean week, super clean week. I hope price action stays like this, right? And not just price action staying that wide, and like clean PA sometimes a lot of people use it as like cope, in my opinion. I think it's having a good psychology, knowing when to trade and when not to trade, and just having a good draw on liquidity in general and looking at the higher time frame and matching with the lower. So yeah, that was this week's recap. Let me know if y'all got questions in the comments or anything, and I'll catch y'all next week.